After the arrest of Xi'an and Evergrande financial troubles, another major player in the Chinese real estate industry, Country Garden, is also facing significant issues, finally leading to substantial defaults. In one of our previous episodes, we mentioned that in August this year, Country Garden had already missed interest payments on $2 bonds. This caused significant concern in society. However, within about a month's grace period, Country Garden managed to make the payments, narrowly avoiding a default, at least temporarily. But as they say, you can't escape a crisis forever. When it was revealed that they managed to avoid default, it indicated that Country Garden was already facing significant cash flow problems. It couldn't sustain its obligations, and default was only a matter of time. Indeed, on October 10, Country Garden suddenly announced that they couldn't meet the 4.7 billion Hong Kong dollars debt obligation, marking a substantial default within the year. Some articles suggest that Country Garden's default could be 4 times bigger than Evergrande's. However, this is a simplification based on the number of ongoing construction projects. Country Garden has roughly 4 times as many under construction projects compared to Evergrande, but this doesn't necessarily mean 4 times as many homebuyers are waiting for their properties. Country Garden might have more or fewer buyers compared to Evergrande. Currently, Evergrande has around 1 million households waiting for their homes. The Xi'an reports on a NITI's public account states that Country Garden had over 700,000 households waiting for their properties just this year. In terms of the critical issue of unfinished housing projects, Country Garden faces more significant pressure than Evergrande. The exact number of Country Garden homebuyers waiting for their properties is likely only known within the company. If these properties remain unfinished for an extended period, the societal impact depends on their actual prices. Higher-priced properties mean larger mortgages for homeowners, leading to more substantial financial pressure. Homeowners who can't move in will continue to pay their mortgages for unfinished homes, as well as their current living costs. In the face of difficulties, sustainable interests become harder to maintain. Therefore, the extent of the impact of unfinished properties on society will depend on the actual property prices. Typically, higher prices mean larger mortgages and greater pressure on homeowners. How large the impact will be on society in the long term remains to be seen. Apart from the crucial issue of unfinished properties, we also need to consider their total debt and debt structure. By the end of 2022, Evergrande's total debt was around 2.4 trillion CNY, while Country Garden had around 1.4 trillion CNY, with a difference of approximately 1 trillion CNY. Besides the total amount, we need to look at 2 critical aspects: outstanding interest-bearing debt and short-term interest-bearing debt. These are the elements that create the most significant pressure on a company's cash flow. By the end of 2022, Evergrande had over 600 billion CNY in outstanding interest-bearing debt, accounting for about a quarter of its total debt, and short-term debt made up approximately another quarter. Short-term debt refers to obligations that must be repaid within an operating cycle, usually not exceeding 1 year. So, when we look at this, it's clear that Evergrande's debt structure is much less favorable. Their short-term interest-bearing debt represents an immediate liability requiring rapid repayment. Now, let's look at Country Garden's debt structure. By the end of 2022, their outstanding interest-bearing debt was only 271.3 billion CNY, less than half of Evergrande's, and their short-term interest-bearing debt was even less, about 50 billion CNY. In this regard, Country Garden seems to have a healthier debt structure. Country Garden reported that they achieved over 330 billion CNY in sales receipts in 2022, which is a stark contrast to Evergrande's struggles. In 2022, Evergrande had receipts of only 35.7 billion CNY, and the situation has not improved since their crisis in 2021. Over the past 2 years, Country Garden has made significant efforts to accelerate cash inflow and reduce debt. So, in theory, Country Garden shouldn't have significant issues. However, the real world is more complex than financial analysis. The connection between events is not linear, and real-world factors can affect outcomes. In 2020 and 2021, China experienced nationwide COVID-19 lockdowns, which significantly impacted Country Garden as they couldn't sell homes. Their cash flow was negative in those years, meaning they were spending more than they were earning. So, when we look at their debt balance now, part of it rolls over from the previous 2 years, creating significant pressure to meet this year's obligations. Country Garden faced a real cash flow issue during these years, but resolving it by selling assets or borrowing more is not a practical solution. These options are difficult for any Chinese company in a debt crisis. Selling valuable assets not only signals financial distress but also means losing future income sources. Moreover, in such rare events, outcomes are not predictable based solely on financial analysis. The societal impact can be much more significant than you'd expect. It's like an earthquake's Richter scale. The focus isn't on the earthquake's strength, but the intensity of the impact on the surface. This is influenced by many factors, such as building resilience. Country Garden defaulting isn't merely about the bomb's power. It's about the whole society becoming more fragile. The connection between these events isn't linear, and black swan events have a significant statistical dispersion. So it's more complex than just financial numbers. In conclusion, Country Garden's financial situation might seem better than Evergrande's, but the actual problems are concentrated in their ongoing construction projects, which are 4 times as numerous as Evergrande's. The impact of a Country Garden default, if it happens, could be much more severe due to the overall vulnerability of the society. This complexity and non-linearity make analyzing the situation challenging. It's a reminder that reality is often far more intricate than what we can capture in financial reports or predictions. It will increase tenfold or even 20-fold. If you don't eliminate the danger within this minute, you're a goner. In the first 4 minutes, you'll see a continuous increase in the number of dead brain cells. From the 5th minute onward, it becomes discontinuous, and it starts to jump significantly. Nobody knows how much it will jump. There's also the saying about the last straw that breaks the camel's back. Of course, one straw can't literally break a camel's back, but in a special circumstance. For example, if the camel is already dying of thirst, or the load on its back has become too heavy for it to bear, adding one more straw can actually kill it because, at that moment, an unforeseeable consequence occurs. So, analyzing Evergrande's financial statements to estimate the impact of its bankruptcy will be highly misleading. It's because when it goes bust in a unique situation, it generates an unpredictably dire outcome. Of course, this unpredictability tends to lean towards the worst-case scenario, so let your imagination run wild, not towards the positive side. So, is it better to let it burst to prevent the last straw from falling? Well, it's highly likely that the camel won't be killed in the end, but the camel's owner will probably be a goner. While a dead camel is unfortunate, there are many more unfortunate things in the world. We can't predict precisely what the future holds. You might ask, after Evergrande goes bankrupt, can we list the consequences A, B, C, and D one by one? Nobody can do that, but we are quite sure of the overall trend. The most tragic thing in this world is not to intervene when you shouldn't. When you go on a rampage with arbitrary interventions, but when it comes to taking action and making decisions, you hesitate and lack the will to act. This extends to our discussions about ancient and modern times. Ever since the concept of GDP was used to measure societal progress, it's been a race to the bottom. Some people, in pursuit of GDP growth, completely disregard the many negative consequences. Since the Industrial Revolution, the average annual GDP growth in the first 50 years of the Industrial Revolution in the 1760s in the UK was only 1%. But that 1% growth in those 50 years enabled the UK to defeat almost the entire European alliance led by Napoleon in the Napoleonic Wars, establishing itself as the arbiter of European order. Now, if we extend this period to 100 years, in the UK's case, after the Industrial Revolution, the GDP's average annual growth did not exceed 2%, but this 2% was enough to transform the United Kingdom into the British Empire. Queen Victoria of the United Kingdom took the crown from the Indian Mughal dynasty in 1876, becoming the Empress of India. During the century, GDP growth in the UK, although slow, was robust and free from bubbles. Every bit of growth was effectively converted into the country's strength and the citizens' well-being. Throughout this century, the society had very little overall debt, and the proportion of financial capital to total capital was low. Enterprises primarily used profits from their own operations to invest and expand production rather than relying on borrowing. This period of over 100 years has witnessed fewer large-scale, especially devastating economic crises that wreak havoc on society, usually triggered by banking crises. This has been the experience of the past century. In society, there are always people who, driven by the desire for quick wealth, believe that an opportunity is right before their eyes and attempt to leverage the most significant amount of capital with the least amount of money. They turn to banks, which on their end attract substantial savings, carry an interest payment burden, and must find ways to lend the money. Therefore, banks, consciously or unconsciously, cater to this impulse for quick riches. When this excessive debt, with everyone maxing out their leverage in various industries, becomes a common practice, any market fluctuations and downturns result in bank crises. The money lent by the banks turns into a massive pile of bad debts, causing bank failures that, in turn, affect businesses and households, leading to a domino effect. Society goes from greed to panic, to lament, and then eventually recovers, forgets the pain, and goes back to being greedy. This cycle has been repeating itself over the last 100 years. In recent decades, the Chinese Communist Party has been fixated on GDP growth and has relied on investment to boost GDP figures. Naturally, this policy has inevitably led to a concentration of effects through state-owned banks. Once one or two so-called pillar industries encounter problems, the entire society is in jeopardy. Why does it inevitably lead to this concentration of effects? If you think about it from the perspective of a bank, when you lend to small businesses with an average loan of 100,000 yuan per company, you need 100 such loan customers to achieve a lending target of 100 million yuan. However, when you lend to large enterprises or real estate companies, one company can fulfill loan amounts in the billions or tens of billions with less management difficulty, significantly reducing the hassle compared to managing 100 small clients. This is why Chinese banks prefer large projects and especially have an affinity for real estate. It's because these sectors require a substantial amount of capital. You may have noticed that much of Evergrande's substantial funding came from small banks. From 2020 to 2021, Evergrande obtained more than 30 billion yuan in loans from these city commercial banks. This single bad loan could be sufficient to bring down a small city bank. However, it's puzzling why smaller banks, in theory, competing with large banks, should concentrate on small businesses they are well placed to serve, as the large banks cannot reach these small and medium-sized enterprises or small customers. But the situation in China is quite the opposite. Large-scale projects, which you'd think should be handled by banks with abundant capital and robust risk management mechanisms, end up in the hands of those with more significant returns. The individuals in power and their proxies seek to profit from these businesses. Hence, the project's returns are virtually guaranteed, resulting in lower risks. On the other hand, private enterprises have to rely on their own strength to compete in the market, where doing business on a smaller scale poses more significant risks. City commercial banks have to chase after large projects, as otherwise they wouldn't survive. Additionally, to attract depositors, small banks often need to offer higher interest rates than large banks, as city commercial banks have smaller capital bases. Individuals like Evergrande or Bank Insurance, by investing a portion of their own money, can significantly influence these banks, have a say in their boards, and determine the bank's operational direction. They can then lend to themselves using the funds attracted from depositors, akin to having a goose that lays golden eggs. This opportunity is too enticing for them to pass up. This is why when such companies face a financial crisis, it has implications for city commercial banks. The depositors of these small banks are often unaware and become the victims. The Evergrande crisis, the Country Garden crisis, and the impending financial crisis in China are all reflections of this. These events not only prompt us to reflect on China's various strengths, but also provide us with profound lessons on how to pursue wealth. Those who excessively leveraged themselves and maxed out their balance sheets end up paying a painful price.